Hello, everyone. My name is Shayna Orzik-Sissel, and I am the founder and Chief Executive Officer at Banríon Capital Management. Welcome to another edition of You're Doing It Alt Wrong. Today's topic, alternative investments are expensive. Myth, misconception. This show is about taking on myths and misconceptions in the alternative investment world, and this is a common one. Yes, alternative investments are more expensive, but they are not nearly as expensive as many people think. Let's start with mutual funds and ETFs and understand that there's a regulatory framework of which these products are required to calculate into their expense ratio phantom fees for all intents and purposes. What I mean by that is if you look at an alternative ETF, and I will choose my favorite, BTAL, the AGFIQ US Market Neutral Anti-Beta Fund, as the example. If you were to look at that, you would see that the stated expense ratio as required by regulators has a very high expense ratio. Last I looked, it was close to 2%. But what you don't know is that there are two things that are calculated as part of the expense ratio that are not real. Number one, they have to calculate into the expense ratio back the cost of paying the dividend on the short positions. Why is this a phantom expense? Well, because it's also part of the calculation for the value of the underlying security that they are short. So when they're calculating the NAV of the fund, it is being taken into consideration. The regulators make them also add it to the expense ratio, even though it's not an expense over and above the calculation of the security. Second, they make them calculate into the expense ratio interest rate coverage costs. When you short a security, you are essentially borrowing a security from somebody who is long the security, and you have to pay interest on the borrowing cost. That is also calculated into the cost of the underlying security when it is calculated into the NAV. But then it is calculated yet again into the expense ratio. If you were to go to the prospectus for BTAL, you will see it has the stated expense ratio, and then it will have line items saying minus interest expense, minus dividend expense. And then you will see that it has a much more reasonable actual expense ratio, which is somewhere around 50 to 60 basis points. This is true with almost every alternative mutual fund and ETF product that exists. But also, even after that, especially in the mutual fund world, they are slightly more expensive, but the cost of implementing strategies that use derivatives and short positions do cost more. So they should be more expensive. I cannot emphasize this enough. We need to be concerned about after expense performance. So if a fund does very well net of fees, that is the only thing that matters. I only think that fees can become an issue when you're evaluating a strategy if, and only if, they are out of the norm for that product. There's a lot of competitors who are a lot cheaper and yours is more expensive. You want to know why. Another reason why a lot of these products tend to be expensive is they have lower asset bases. More assets means lower fees. It's just how the industry works. A lot of alternative products don't have hundreds of billions of dollars of assets because many of them are new, many of them have not been used in the past, and people are just now taking notice of these types of products. So things to consider. Now, when we look at the private side, a lot of the same things apply. 2 and 20 is the standard in the hedge fund world. 2% is the management fee, 20% is essentially the profit share. Remember, most of these products are formed as LPs, where the manager serves as the general partner, and so they get paid for their service. Management fee is the cost to run the fund. Now, sometimes other things can be added on, and you need to pay attention to that when you're looking at these managers. Sometimes they will pass through trading fees. Quite frankly, that should be in the manager fee. Sometimes they will pass through marketing fees. That should be in the management fee. But when you have a general partner that is participating actively and has skin in the game, That is why the 20 is important. That's a good thing. They do well when you do well. I am leery of funds that charge more than that. I went to a conference and a very well-known, very famous hedge fund manager said his fee was $5.50. And I said, you're not that good. And I never invested. However, 2 and 20 is pretty normal. Just make sure that the costs make sense for the cost of running the business and the cost of what the GP is putting in. In the private equity and private credit world, it tends to be a pure profit share, which again makes sense. If you're investing in private equity, the private equity firm is actually doing a lot of work. They're going in there, they're looking at areas that can be improved upon in the business. They're looking for efficiencies, a way that they can make the company better to, increase the value of that firm. That's why they took them private. They thought that there was an opportunity to improve performance and increase the value of the firm so that they could take it public or somehow monetize or have an exit strategy that would allow them to sell the company for more than what they paid for it. And they are very good at that, and they are paid accordingly. Also, same thing, general partner, limited partner kind of approach. So are alternative investments expensive? I would argue no. They are exactly the cost they should be. Yes, they are more expensive than traditional investments because they are much more expensive to actually implement the strategies. But there is also some phantom fees in there, especially in the ETF and mutual fund world, that you need to be aware of so that you can have a better idea of what the actual cost of owning the product is. So with that, this is the episode 4 of You're Doing It All Wrong. Thank you for watching. Don't forget to subscribe and leave a comment. If you have a topic you want us to take on, feel free to comment below and let us know. And you never know, it might be the next topic we take on. Have a great day.